My name is Sean. I've been trading for 4 years now, and I made the decision to start documenting my progress online. I made a lot of mistakes throughout the whole way, but I'm here to break down everything I've learned as I continue to improve. Now, today I want to go through my strategy that I normally trade on a day-to-day basis. Currently, I'm trading during the Asia session because I'm busy with work in the mornings, but this would be an ideal setup that I'm looking for on a day-to-day basis. I trade a supply and demand model based off of the 5-minute time frame. Here I'm on gold right now, and I got the replay mode all the way back to about, a couple weeks ago on a Sunday that I could find this nice little clean setup. But I just want to go through and start showing what I'm looking for. So right off the bat, now I noticed this little breakage structure here, so I'm going to go ahead and mark this up. So this zone here that I'm marking up, I marked it up around this last black candle here, because this was the last down candle that we had before we got a nice push of momentum up and out of this area. This also gave us a nice breakage structure here, and of this high actually as it pushed up. Now normally I will wait for price to pull back down into my zone, give me a break of candle entry, and that is where I will get in for a buy in this instance. So from here, we'll just keep waiting, give it another candle, see what it wants to do. Okay, we're still floating around there. Now in this situation here, we have our EMAs that have crossed finally. So ideally with my trading strategy, I have a 13 EMA, I have a 50 EMA, and I have a 200 EMA down here. Now this is the order that I like to see them in when I'm trying to buy. I want blue on top, red in the middle, and black on bottom. So this is ideal for this type of setup here. We have a breakage structure. We have a nice clean zone that left a gap behind here on this candle. We're just waiting patiently for this thing to come back, reject off the zone, and then give us an entry to go higher. So we're gonna wait. So right here, as you can see, I'll zoom in a little bit. We actually did get a wick that tapped right into the zone here. So ideally in this situation, I'd be waiting for the next candle, and once it breaks the high of that candle that finally tapped the zone, that would be my buy point. So right here I'd have my stop loss set up, and in this trading example here, it's about a 17.6 point stop loss. So for gold, that's pretty big, because gold's about $100 per point. That's about $1,700 risk right here with just one contract. So in this case, I would be trading the micro contracts for sure. And normally I'm going for about a 1 to 2 on these. So we'll see if we get a break of candle on this guy. Go to the next one. Okay, so this candle here did not break the high of this candle. So now what we want to do is drag this down, and we're going to look for the next break of candle. So we'll drag this stop loss up. So now our stop loss is much smaller, still below the wick at this zone. But now that this candle didn't break this one, we have a much smaller stop loss. So now it's about 12.8 points. So still a lot, $1,200. I'm not in that league yet, but I'd be on micros. So if we get a break of candle from here, this would be where I'd be taking a buy. And then we'll drag this down right to a 2 to 1. Close enough, huh? Yeah, that's close enough. So we'll go next candle. Boom. Oh, okay, yeah. Beautiful, beautiful. Like, that couldn't be any better from this example, actually. I didn't realize that hit in one candle. But we got a break of candle right here. So right when that opened and it started pushing and broke the high of this last candle here, we're hitting buy. We're buying and we're holding. Stop loss is down here. We're holding for a 1 to 2. In this situation here with normal gold, one contract, risking $1,200 for, $2,500, or 12 points for 25 points. This is massive, so I would definitely be on micros trading about $250 risk to make about $500. That's typically what I'm shooting for around here. But in this instance, most of the time I will close fully at a 2-to-1. Sometimes, I like to try to push for more, and let my trades run a little bit. But typically I just like to be safe, secure, grab my 2-to-1, get in and out of the market, make my profit for the day, and get out. Normally I'm trading about 2 trades max a day, risking $250 on each trade. So if I lose both trades, I'm losing $500. If I win both trades, I'm winning $1,000. Now a lot of times I'll win one trade, I won't find anything else, and I'll just stop. Or I get really emotional during one trade, and I gotta cut it off. I gotta stop right there. So I'll just get out of the market, and I won't trade anymore for the day. I'll just call it a day, move on, let my mind reset going into the next day, so I can come back fresh. And I won, so I'm up money for the day. So other than that, that's basically a perfect example. A 1 candle hitter, 1 5-minute candle pushed right up, smack TP. It's a quick win. You're in and out of the market in 5 minutes, and you just made a 2-to-1 on whatever you're risking. So this is prime example. I love to see this. But as you can see, you could have kept holding, but there's no need to be greedy. Now, as of recently, I've actually been trading a secondary strategy because the supply and demand model I use has not been actually showing itself very often. And what I normally do here, this has not been presenting itself as much as I like. So what I've been also using is a 13 EMA breakout strategy. So basically I'm looking for either a double bottom, boom, 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 look for a double bottom, and then I wait for a candle closure above the 13. So say we have a 13 coming here, I wait for a candle closure above the 13 EMA, this blue line, and I hit buy with my stop loss below the candle. Now in this situation, let's go back down here. This situation, this wouldn't be an ideal 13 EMA breakout for me, but this would be basically the gist of what I'm looking at with a 13 EMA breakout. So with the 13 EMA breakout, we have this one candle here that closed, it pushed and it closed above the 13 EMA in momentum. As everything's pushing up, we have bullish momentum coming in. We just came off of this demand zone, obviously. So we're pushing up. We got a closure above. So that's where I would enter with my stop loss below that candle. The same candle that I took the entry on. And same thing, I'm always going for a 1 to 2 risk to reward. So in this situation, I'm risking 8 points to make 17 points. But ideally in this situation, it was not a good idea to trade because we don't really have any type of double bottom. If we actually want to go back down, we can look and see this is almost a perfect W pattern double bottom right here. And we actually do have this candle right here. Huge momentum candle, pushed up, closed above the 13 and the 200 at the same time. But if we throw our little freaking tool on here, we can see it is a massive candle. 16 points on the gold is a lot of money to risk. It's definitely drop down to micros if you're not trying to risk $1,600, obviously. I'm not trying to risk that much money yet. And then we can shoot for a 2-to-1. Now, as you can see, this took a little bit of time to play out. We got a little bit of push, some drawdown, and we continued up slowly, but surely we got there. Now, a lot of the times with these, this happens quite a bit where we'll get like a pullback into this bullish momentum candle. We'll get halfway through it, it'll pull back nicely, and then it'll finally take off. So in this situation, you got to stay stern with your stop loss. Don't go overboard. Don't jump out early. Don't freak out. You know, keep calm, breathe. It's okay. You know, you're in drawdown. It looks like it's going bad, but then look what happened. It went just straight up, all the way up to these highs over here. But yeah, other than that, that's basically my strategy, the two strategies that I use on a consistent basis. You know, supply and demand, and then the 13 EMA breakout. These examples were for buys. Obviously, you know, it's going to be the opposite for sells. You know, we're looking for a break of structure to the downside. So here, let's mark that up. Boom, 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 boom. We're looking for that break of structure to the downside with a supply zone sitting up here somewhere. We'll wait for price to come all the way back up, tap into our zone, reject the zone, and then we'll wait for that candle, that next candle, to get broken down. So once that candle gets broken, we'll set it up just like we did on the buys over here. We'll set this up. We'll go for our 2 to 1. And boom. And we'll just let it play out. And obviously with the 13 EMA breakout, instead of a double bottom, we'll be looking for a double top. And when the market is overextended, it's been buy all day long consistently. The market's got to cool down at some point. So we wait for a double top confirmation. We look for the 13 EMA that has been, obviously it's going to be creeping up the whole time because we've been bullish on the way up. So once we get that double top and we get a candle closure below that 13, then that's when we'll hop in for the sell. Stop loss above wherever that last candle was. Go for the nice little 2 to 1 and let it ride out. It's as simple as that. This is exactly what I trade and look for every single day, over and over and over. I try to keep it as simple as I can. Don't want to overcomplicate things because that just makes it so much more challenging on yourself. You're looking for a million different strategies, a million different indicators and chart patterns. This is what I've found has been very, very beneficial for me. It's worked very well for me. I've found somewhat of success from trading this strategy. The only thing that I need to lock in on a little bit more is my psychology, my emotional discipline, because as we all know, when you lose, it doesn't feel good. You always want to win, but you got to learn to control yourself through the losses. You got to learn to be patient. If you lose, it's okay. It's a part of the game. It's a part of the process. This trading thing does not come just win. You're not just up and up and up making profit after profit. You're going to lose. You're going to lose over and over. But that's where your risk management comes into play. That's where your psychology and your emotional discipline comes into play. If you can get that on lock, combined with a solid, easy, simple strategy like something like this, then the sky is the limit. You're 1 to 2 trades a day. You're in or out. Lose, win, break even, whatever it is, you know, you'll be profitable after a certain amount of time. And that's where I'm at right now. I'm barely breaking over that profitability because I finally learned to control my emotions and just close the laptop when I'm done trading. If I lose, I'm done. Just walk away. Come back tomorrow when my head is clear. It's the best thing that's been helping me a lot recently. But yeah, that's basically it. So if you want to continue following along with my journey as I track everything, I'm going to be doing live trading during Asia session and a lot more to come. I'm really excited for this. So, you know, if you want to continue following, give me love and support. I'd really appreciate it. But until next time, peace.